the Nigerian equities market is resuming bearish after Wednesday's Eid Maulud holiday. Market watchers expect the market to remain mixed with a tilt to the bears. Sodiq Safiriyu, investment research analyst at Meristem Securities, joins me now for more market updates. Sodiq, thank you so much for joining us on the show today. Let's start off really now with the market performance we've seen here. We've seen that bearish sentiment sustained from last week, and that is also following through from yesterday's holiday when we had the break. Talk to us about the highlights of this week's performance.
Right. Thank you very much, JD, for having me. Yes, I mean, the sentiment, as you mentioned, has been, pretty much negative. We've seen that extend for, the past 2 weeks, and this makes it like the third week we'll be seeing the negative sentiment. Right. So, I mean, the investors are already taking profits on tickers that have, likely gained significantly from weeks back. Again, we've seen that's prevailing negative sentiment following the FTSE resale reclassification of the Nigerian market to unclassified market from frontier market, and that has also elongated following some earnings reports that the investors consider less or not as good as expected. We saw the one of Access Core recently when it resumed on Monday, and it lost heavily, which as well trickled down into some other banking tickers. So generally, the sentiment in the market has not been very positive, as we've seen in months like May, June, and July. But again, we've just been seeing pockets of buying activities, but largely sell-offs. Monday, Tuesday, and today. Currently, as the market is, we've been seeing that, taking profit taken from investors and the market going down.
And talking about the sellers for today, we also seen O&O also leading the losers as well at intraday. Let's also talk about the future of some of these companies as well. Now, finally, we have the results from Access, which we highlighted earlier on, and then looking at Cornell's earnings as well. This is for the longest time we were anticipating that was the 2021 figures. But let's talk about your take on the good stocks to really consolidate, and everyone is saying, well, investors have to look at stocks with very strong fundamentals. Which are on your radar?
Yes, I really do agree with that conversation. I mean, you have to take position on fundamentally sound stocks, especially now that it seems like investors are separating the boys from the men, and that gives much more. You have to be more cautious about the stocks you buy. For me, I would say that there have been certain stocks that even the recent sell-offs are taking them to much more attractive entry prices. We've seen some of these banking tickers that have that are depreciated. We have the likes of Zenith, we have the likes of GTCO that are currently trading around the range of 30 to 31 naira. Considering dividend payments, consistent earnings and expectation for their full year earnings to be solid. Even Access Core, as we said, is still trading at 15. It also gives that attractive entry point for these tickers. Again, we are expecting 9M results. I mean, September would close, so would end very soon. So these the expectation for some of these tickers to report good or solid earnings in 9M would also drive sentiment on these tickers. So yes, as I mentioned, some banking tickers, as well as some tickers in the insurance sector. We have ICO, we have Lasaco that has also depreciated for a while now. As well for consumer goods, although I would say one has to be very much cautious in the consumer goods sector, considering the lingering or prevailing inflationary pressure, and as well as the FX depreciation that affects their costs. But largely, we have these stickers that you can take position across the sectors.
You really added some insights into my next line of questioning, because at the end of the day, while we are still waiting for the Monetary Policy Committee of the Central Bank of Nigeria to meet, and then we have fresh pronouncements from the new CBN governor. Yes, it says the backlog will be cleared, and then this should be able to help prop up the value of the naira. We saw the trade at about 1,000 naira to the greenback yesterday. Today, it's about 995 naira. For sectoral performances now, let's talk about how you see that going You talked about the fast consumer goods and the impact this is also having. Let's look at the broad-based. The financial players are still leading the chart, the activity chart. Let's talk about the different sectors.
Okay. So for the financial services sector, I mean, it's very it's just normal that they will still lead the charts when it comes to volume and value traded, considering their liquidity. For them as well, the expectation for the 9M and even generally in the 2023 full year is that they would record increased earnings, considering majorly the FX evaluation gains, and as well we have the interest income that most of them, considering the high interest rate environment. So the interest income for them has also improved, and you would expect that, for them largely it would be positive. For the consumer goods, as I said earlier, just with rates, the lingering inflationary pressure, and the expectation is for inflationary pressure or inflation rate to continue to maintain that upward trend. As well, we have the devaluation of the FX, which will be very important for the central bank to take quick action. Delay on that action would really affect them, considering that feeds into their operating expenses and their cost of sales. So again, for them, one has to be cautious. We could still see them record losses, as we saw for some of the players in the in the first half of the year. So 2023 full year cumulatively, you might still see them record losses, but as time goes on, we expect them to rebound. The sentiment, the positive sentiment on banks would also filter into insurance, considering that they also get some of these interest rates and interest securities, yield and interest securities. So for insurance sector as well, it is expected to be largely positive. For industrial goods, you would see that there are talks around reforms and implementation of reforms from the new administration, which is expected to bolster growth in that. So they expect that the insurance goods would also benefit from this. For ICT sector, we saw that the sentiment is still mixed for them, especially because most of their operating expenses come from they deal with a lot of capital expenditure, and they have to import some of these goods. They repay in FX, or they pay in FX, and they also have finance costs, which also suppress their bottom line. So for them, you would see increase in top line. However, the bottom line might not grow as much as we expect. So largely across sectors, we'll just see that mixed sentiment as I've analyzed now.
Sodiq, we cannot wrap up this conversation without not taking a look at the latest domestic and foreign portfolio investment report we have from the Nigerian exchange. We're seeing here that FPI inflows rose about 45% thereabout month on month, hitting about 13.7 billion naira in the month of November. And then we're still seeing institutional investors continue to dominate the market while they outperform retail investors. Let's talk about this quickly as we wrap up.
Okay. All right. So I would say that it's rather good news that we saw that increase in foreign inflows, and especially the participation. We also saw that decline in foreign outflows, which is a good thing for us, considering the fact that we have been clamoring for more foreign inflows, even though we're saying that it's FDI, more of FPI, but we cannot overlook the importance of the FPI when it comes to FX liquidity. However, one striking thing for me in the report is the drastic decline in domestic participation. If we look at it already, we will see that domestic participation declined by about 63%. That is rather concerning, considering the fact that domestic investors actually dominate the Nigerian equities market. So if we're seeing the domestic investors shying away from the market, or gradually reduce their participation in the market, then it also speaks to that reduced confidence in general sentiment in the Nigerian market.
For so many, it's a wait and see. So we continue to wait and see as the economy also shapes up based on the reforms and how they manifest. Sodiq, thank you so much for speaking to us today. Tomorrow is the last trading day for the weekend. The entirety of the third quarter of the year will definitely keep tabs on all of the developments as they unfold. Thank you once again. That was Sodiq Safiriyu, investment research analyst at Meristem Securities.